So many times buyers ask us questions and we go straight to the lender to see what the answers are. So today I'm happy to announce that I'm here with our great lender, David Amelang with Moon Tower Mortgage, and he's going to be answering those questions for us. David, thank you so much for being here, first and foremost.
Thank you for having me. I appreciate it.
Of course. Now, David, the first thing that I always want to ask is how important do you think the realtor-lender relationship is for clients?
I think it's the most important relationship you can have during the transaction so that you're both on the same page, headed towards the same goal. If you're not communicating with your client based on that established relationship that you have, then it's going to be a nightmare when the client doesn't know what's going on, if there's miscommunication by their team behind the scenes.
Yeah, I agree. I would say communication is one of the most important things in real estate, and having a good lender on your side where you can have that communication is probably one of the most important things.
Yeah, agreed, definitely.
David, how can a realtor prepare the buyer for a lending conversation?
That's a great question. I think the most important thing is just to introduce the buyer to the lender as soon as possible so that the lender has an opportunity sooner than later, mostly to pull credit, but also get a good picture of what their financial situation is. So I don't know that there's necessarily a conversation that you need to have to prepare them to talk to me, so much as just have them talk to me as soon as possible.
Yeah, agreed. Especially before going and looking at homes.
Always before going and looking at homes, yeah.
That's the joke of real estate, right?
Yeah, absolutely. The reality is they'll call me on a Saturday afternoon after they've seen the house and they want to make an offer in 30 minutes.
And you still get it done.
I do get it done, yeah.
Awesome. Now, David, with the disruption that we've had in the market and the interest rates being higher, most buyers, they think that they can't buy anymore because of those high interest rates. What would you say to buyers?
Yeah, it's a great question because we know that mortgage rates impact the affordability of homes. So for every 1% increase in mortgage interest rate, it affects the purchase price of the house that they can buy by about 12%. Overall, though, what I communicate to my clients is that the challenge of having higher mortgage rates is still a much better environment to be in for them versus some of the challenges that we've seen in the past where we're facing high unemployment or extremely high home prices, because a high interest rate now, which is part of this normal economic cycle that we're in of high inflation due to high stimulus, due to the pandemic, we will be out of that cycle back into lower interest rates in the future. So it's very pertinent when talking to a client about how the mortgage rate impacts their monthly payment and their affordability, how that translates to the purchase price. Still a great time to buy though, because much better to buy with the high interest rate than trying to buy, for example, when somebody doesn't have a job or when they're having to offer $150,000 of the list price and it doesn't appraise and things like that. So it's a manageable challenge, fortunately, even though the monthly payment might be more expensive for the same purchase price house, it might push you into a lower purchase price point. At least there's still less demand at that price point when you're trying to make an offer, for example.
Yeah.
Ultimately, the most important conversation I have with my clients is about their monthly payment and what they can afford on a monthly basis. I try to focus on the number with the dollar sign in front of it and not the percentage sign behind it. If somebody can afford $2,000 a month or $4,000 a month or $6,000 a month, let's just look at how far they can get with that with the current interest rates, whatever they are.
Exactly. No, and I think that's a really great way to do it, because at the end of the day, whether you purchase a home that's $500,000 or $600,000 doesn't really matter. What matters is what are you paying on a monthly basis and what are you most comfortable paying?
Yeah, exactly. And then we also tend to talk about interest rates as if there is just one interest rate, when the reality is there could be dozens of different interest rates on any given day based on the purchase price point, the down payment amount, the credit score, now the debt to income ratio, and other variables, the mortgage interest, if they have that, that'll impact what their overall payment is, besides just the interest rate, even though that interest rate itself can still be a lot of different things.
Now, David, speaking about that and talking about these different programs that go on, do you have any loan programs specifically to help combat these high interest rates, or that people are utilizing a little bit more in order to kind of help them with their monthly payments?
It's a very popular question. Unfortunately for me, I tend to look at what's tried and true for the client and getting to optimize their qualifying and minimize their interest rate through the old-fashioned ways of improving their credit score and working on how the loan is structured, whether that's through a split lien or lowering their debt ratio, and there's different ways we can work on that. So we keep it simple, as much as we can within the parameters of the tried and true loans. And then we just focus on going back to basics of improving credit score, saving for down payment, looking for programs within that to maximize the purchase price they can get for the monthly payment they can afford.
Would you say, instead of doing a temporary buy down, would you rather a buyer do a permanent buy down? If they wanted to get their rate, let's just pretend to like a 5.25, pay that money up front now and have that 5.25 for the lifetime of the loan. And if they choose to refinance later on, they do that at that point in time.
Absolutely. I think in general, when I run numbers for my client, let's say that the interest rate is going to be at 6.5%, which is about average for today's conventional mortgage rates. Then with a temporary buy down, if you're doing a 2-1 buy down, then the interest of what the difference would be in the monthly payment down to 5.5% or 4.5% is prepaid into an escrow account. So because the interest rate and the interest paid on that loan is still 6.5%, even if you can get it prepaid from the seller, I'll typically, to answer your question, use that money to do a permanent buy down if they truly need a lower mortgage payment, because that way the mortgage payment is still fixed. If they can't afford that payment on day one, they're not going to be able to afford it in year 2 and in year 3 when the payments adjust. So I feel like those temporary buy downs are a short-term fix for a long-term problem, whereas a permanent buy down, we have more predictability and stability, especially when inflation is high, for borrowers going down the road. Because we already know that the cost of insurance is going up, we know that property taxes are going up, and the last thing that they want is for the principal and interest payment of their loan to go up 10, 15% per year for the first couple of years. Now, the other side to that strategy is if we say we've got a large seller credit, instead of doing a temporary buy down, let's just do a permanent buy down, is that with those points on a permanent buy down, you may also not be in that loan that long, because if we can refinance in the next 3 to 5 years, we still want to make sure that the permanent buy down makes sense and that you're not paying $10,000 in additional closing costs for something that's only going to save you in interest over the next 2 or 3 years. So the point of all of this, if it feels like we're getting into the weeds a little bit, is that it's my job and the service I provide to run these numbers for the client and make sure that based on their purchase price, their down payment, the interest rate that they're eligible for, and the monthly payment they can afford, that we're looking at everything on a case-by-case basis and doing the math and running the numbers to make sure that it works for them and their needs.
So David, what do you have to say to those investors who are wanting to get into the market, wanting to invest in more properties, but their concern is the higher interest rates?
Yeah, another great question. So the high interest rates will mostly impact someone who's looking at long-term rentals that wants to cash flow, which can be a challenge in Texas, especially because of the property taxes. So when I'm talking to an investor, we really look at 2 things. One is, what do they intend to do with the property? Is it going to be a long-term, a short-term, or a mid-term rental? And then the other question is, what are their priorities? Cash flow is a high priority, especially for entry-level investors doing long-term rentals. But we can also look at the 1% rule for ROI, and we can also evaluate what the cap rate is on that property, especially for an investor who's using it for short term. So we'll still take all of that analysis into consideration to make sure it's a good buy for them. But we also have to consider that typically with higher interest rates comes lower demand, and it's a better opportunity for investors because, as they say, you really make your money on the purchase, not on the resale. So if you can get a discount on your buy price, then that's going to be better in the long term than your temporary holding cost, which is what the interest rate is, which we can typically refinance if rates come down in the future anyway.
No, and that's great because, we do work with obviously a lot of investors, and we are able to negotiate some really great deals that we weren't able to do the past couple of years with all of the craziness in the market.
Absolutely.
Yeah.
And if that's the case and we're negotiating, or if you're negotiating the purchase price, then it's also why our relationship is so important, because we have an open channel of communication where, depending on your feel for what the sellers are going to be willing to offer, maybe you're getting a discount on the purchase price, but if we're really close to being able to cash flow, then you could be negotiating a seller credit to do a permanent buy down on the interest rate to get the client where they want to be based on their priorities.
Yeah, or what we've done in the past where we negotiate off of both seller concessions and purchase price.
That's like the best.
Now, let's talk about timetables for when we can close and everything like that, because I know we've been working together for a very long time.
Yes.
And we've been able to win bids because of the amount of turn time that you're able to do. And even you came on one of our listings and were able to offer a 14-day close. And this was, you know, a little while ago when things were a little bit crazier. So tell me a little bit about what it would look like if someone were to want to apply, and how quickly could they get into a home if that was something that they were interested in.
Last week, I actually got an application and a contract on a Saturday. And by the end of the day on Monday, we already had the appraisal ordered and an underwriter approval the same day.
Wow.
So
Same day
underwriting approvals, and then the appraisals, that's a third party. So best case scenario typically is anywhere from like 1 to 3 days. But if somebody needs to close in 10 days, 15 days, that's entirely within the realm of possibility. It's also that much more important when that's the strategy that I talk to the client and get their application and all of their documents up front so that we're ready to submit as soon as the contract is executed. But we can send disclosures, order appraisals, order title, order the insurance, submit to underwriting the same day that they're under contract and get them closed technically legally within 7 days.
7 days, guys. That's impressive. That is not the average or
Not
normal.
at all. No, 30 days would be your average normal contract. I think in my experience, 20, 25 days is becoming more normal, especially as lenders become more efficient, more automated. But I am a very impatient person, for better or worse. And when it comes to loan closings, the sooner the better. So but we're working on getting those files clear to close and docs to title as quickly as we can so that we can hurry up and wait, as they say.
Wait for the HOA documents. Because that's the real thing that we're
That's okay. We if we get the file approved and ready to close, then we have nothing else to do but to call the HOA over and over and over again every day until we get what we need, if that's the last thing we're waiting on.
There we go. There we go. So, David, this was so great. Thank you so much for joining us today. Now, before we let you go, I always want to ask, is there something that we missed or anything that buyers need to know now before we go?
Yeah, I think the most important thing is just to do an application. Let's talk about your goals. We can't figure out how to get where you want to be without figuring out what your starting point is. To talk to me sooner than later, submit your application, talk about what your goals are and how we can get there. That's the most important conversation we can have. So anybody who wants to see if they can purchase their first property, purchase an investment property, is even thinking about buying a house, anybody who's currently renting or already owns that wants to buy an investment property, let's just have a conversation. There's no obligation. I love educating people on these topics and helping them to reach their financial goals through home ownership. It's really my favorite thing. So just give us a call and let's talk. That's it.
Well, David, thank you again. And guys, if there were any questions that you thought of that we didn't answer, comment below, send us a DM and let us know, and we're happy to jump on and do another video for you. Until then, make it a great day.